All right, folks, welcome to the video. Anthony Special here with Hawkeye Traders. Hope you are having a phenomenal day. Want to talk about the light sweet crude market. I know I visit it often. I talk about it because I trade it, okay? I like showing you real life examples that were identified in real time using the Hawkeye volume and price action theories, okay? So, trading crude oil live this morning in front of other folks trading live money. So why is that important to know? Well, it adds credibility to the fact that, hey, you know, this guy, Anthony, he could say anything in hindsight, but it would be really hard for him to, you know, share something that's ultimately not true. Not that I would do that, but I just like to know that there's real credibility behind it. So come into the market here. Crude's been on an absolute tear. Those of you who are members of Big Energy Profits, we have been taking some pretty big, nice profitable moves lately. But as you could see yesterday afternoon, we placed a somewhat of a double top right here in that area. All right. During the overnight here, we kind of danced around a little bit. We made a little bit of effort here to get through it, but we failed very quickly. What I like to see once we get above a level is for that level to now stick, right? So ideally, I want to see a break. I want to see consolidation. I want to see a correction, and then I want to see price pull through that high. We didn't get that, all right? As we were looking at the market a little bit earlier, we were talking about retesting the double top from the prior day, some liquidity resting at 81.60, and then my next higher time frame target was here at 81.80, which we fell one tick short of. So my hope was once this transpired, we were going to pull back, find support, and then move on to ultimately pushing higher. Didn't happen, okay? And that's just part of trading. But what was able to be identified that was kind of an onset to say, hey, this theory is probably not going to play out. I need to now rethink it based upon what the volume's telling me up here in this area. Okay? We get a nice hard push. I'm going to zoom in so you guys can see this a little bit better. Right? So we have we get a nice pullback in volume as we get a pullback in price. We'd love to see that. We'd love to see the impulses and corrections correlated between both volume and price action. And then we come in and we get this really, really strong push here of volume. Okay? We break through the prior day highs. We break through the first failed attempt. Everything looks great. All right? Looking at that 81.60 now, you know, pushing that for that liquidity, and now looking to achieve that 81.80, all right? What concerned me very specifically was the candle that followed it, this one right here. And why did it concern me, all right? The volume was not that much less than the prior candle that broke all of this. And the fact of the matter is, this candle didn't go anywhere, right? The price action didn't go anywhere. It opened and closed, you know, within a penny of it. Where this opened at 81.46 and closed at 81.69, right? We had like a really nice push here, 23 ticks from low to high. And this one, nothing, right? Like we didn't accomplish anything. So for that much buying volume to still be present and no follow through, that tells me what? Well, there's a good chance the buyers are being absorbed. Okay? What does that mean? It means two things. Either there are passive sellers here that are willing to take whatever buy orders are coming across the book. It also means that the buyers may have climaxed. All right, this is not a textbook climax, but it does tell me that there's a very significant difference in the amount of volume here versus the size of this candle. So now what am I watching for? Very specifically, I'm now looking to close above that candle. And if I can't close above that candle, what's going to happen? The market's going to fall back. Now, if we don't hold here, we're going to now push through these lows. And that's what happened. This specific candle, and the fact that this candle here, volume decreased and then increased, and we were still unsuccessful in closing above the first candle of concern, now led me to be very concerned that perhaps we're not going to go higher. Now, my anticipation was 81.80. Right? And the high of this candle came in at 81.79. Now, I knew from my own analysis that there was higher time frame resistance at 81.80. And ultimately, that higher time frame resistance was enough to not allow price action to push through it. All right? We came one tick from it. I mean, listen, when you analyze the market, every price point of support and resistance represents an area. Right? So I always tell traders, hey, listen, you better start thinking, start getting prepared as you approach that area within maybe 10 ticks and maybe start taking profit within 5. Only because that's other traders, if after 13 years I'm analyzing the market and I believe that there's an area of key support or resistance, there's a chance that other experienced traders are also doing the same thing. So if there are other traders that are interpreting what I'm interpreting, they're going to be actionable around those areas. So what does that mean? That means as we approach this resistance, there were other traders that became actionable, absorbing these buying orders. Even on increased buying volume, we were unsuccessful in taking 81.80, and then the market fell back. Not only did we fall back, we pulled through the prior lows, corrected back to the prior day high, found new lower resistance, and then went on to basically sell off for the next several hours. So I made it very clear, if we cannot get through 81.80, we're out of business. If this area, the prior day high, does not hold, we're out of business, at least to the upside. It doesn't mean that there's not a downside opportunity, but in a trending market that is trending higher, okay, this is the prior day high and the failed first attempt. Right? We broke it, we hovered above it, we broke right through it. So what was resistance was again resistance, became support, was broken below, became resistance once again. And then the market continued to sell off. Whether we continue lower or not, we got some nice strong buying coming in here. If you notice this reversal candle, we would call this a green bottom. All right, so nice long wick on some increased buying volume. So, if we start to break above this area here, I would say above 80.75, even 80.80, there's a chance for recovery. I would then be looking at 81 probably as potential resistance, in this 80.90 to 81 area. So we'll see if this does start to recover. But the fact of the matter is, guys, it's quite simple. When you have the onset of understanding how volume should react in relationship to price action, it gives you an undeniable edge in the market. And at the end of the day, as a professional trader, the only thing that makes you different than every other trader, right, even other professional traders, is your edge. My edge, Anthony Speciale's edge, is going to be different from yours and everybody else's. At the end of the day, it doesn't matter. What matters is how you take that edge and how you apply it to the market. I can tell you, after 13 years in this industry, right, I have tested every single piece of software and indicator that exists, right? Whether I bought it myself and squandered my own money, or somebody has approached me and said, hey, I'd like you to endorse my product, I have tested tons of them, right? I came to Hawkeye as a paying customer and said, I love volume and price action, and I believe that it's the only thing that can give you an onset to what could transpire next. It's the only leading indicator. So having the understanding of that volume and price action, working strictly around the Hawkeye tools, utilizing the Hawkeye methodology that we give you access to, has been what's a game changer for me. It doesn't matter if you're day trading, you're swing trading, you're position trading. You could be trading stocks, futures, forex, cryptocurrencies, options. Doesn't matter. The theory between volume and price action is always the same. Our indicators can be applied to TradingView, TradeStation, NinjaTrader, and MetaTrader. So all of the most popular platforms, our indicators can be applied to. So if you want to learn more about the indicators, excuse me, if you want to learn more about the methodology, do me a favor, go below this video. I'm going to leave a link. Click on it. It's going to take you to a training webinar. Grab a piece of paper, a pen, a cup of coffee, and just work your way through it, taking notes. And you'll be amazed how you start to realize that no matter what's happening in the market, when, where, or why, there is an interaction transpiring between volume and price action. And that interaction, when you're able to understand it, gives you insight to say, hey, I got 2 reversal candles here on increased buying volume with 0 follow through at resistance I had identified. 1 tick short of it. That tells me, at least in the near term, we're going to fall back and potentially have a bigger picture reversal. And that's exactly what happened. So if you want to be able to interpret volume and price action just like that, go below this video, click on the link, consume the content, reach out to us, ask us any questions that you have. We'll be glad to answer them. Let's get the indicators populated up on your platform. Let's get you access to the Hawkeye Volume Mastery Library. Let's get you in tune to what's happening, right? Because at the end of the day, you can see there's no other indicators on my chart, right? I will remove the drawings and I have volume and I have price action. That's it, because that's all you need. That is all you need. You must be proficient at what matters, right? Because every indicator that you buy, that you apply to your screen, is going to be lagging, meaning the price action or the volume have occurred already, and that is what has been coded to populate the indicator. So it's late, right? It doesn't matter what you add to a wristwatch, okay? It doesn't matter what you add to it. You're never going to get it to tell time more efficiently, because that's what it was designed to do. It's the same thing with trading. You're never going to find anything more efficient than volume and price action. So I encourage you, consume that content, reach out to us, ask us any questions that you have. Let's get you the indicators. Let's get you access to the training. Let's get you understanding volume and price action, because guys, at least for me, it was the game changer. I'll see you in the next video. God bless, and thank you so much for being here with me today.